So I guess we can start. Welcome, everyone. Welcome to our guests. This is actually I think, pretty exciting panel because finance often talks a lot about people who have a lot, and this one is about people who struggle and those who have not. So I'm actually going to ask them to introduce themselves because their business speak a lot about financial inclusion from different levels, and I think no one better than them themselves to explain. So Rafael, please.
Hi, my name is Rafael Jonen. I'm the co-founder and CEO of Aux Money. Aux Money is a credit marketplace. What we do is we bring together borrowers and lenders, consumers. We operate in Germany, and what we do well is that we look at borrowers very differently than traditional banks. So with that, we can enlarge the spectrum of borrowers that are served, and I can elaborate a bit more later.
Hello, everyone.
Sanja.
My name is Sanja. I'm the CEO of UTrust. UTrust is a Web3 payment technology platform. So in a nutshell, we allow anyone to pay with cryptocurrency as a payment method and any seller to accept cryptocurrency while either settling in fiat, so that's euros or dollars, or settling in crypto. And my background is traditional payments and e-commerce, so I was at PayPal before and eBay before that. And that's what actually brought me into Web3, seeing the inefficiencies of the traditional payment space.
And John? It's not working.
Should I get someone? Let me just go quickly.
Thank you. It's a technical glitch. We'll get sorted soon.
You can't hear him. Yeah.
Maybe I should start talking. Are they coming? Anyway, let me start talking so you guys nobody wastes time. As our presenter mentioned, financial inclusion is a big deal. I don't think people are so aware, or maybe they are, but it's just a stark amount of money, amount of people in the world who don't even have access to a bank account. So, finding solutions for this is extremely important because, as you can possibly imagine, if you didn't have a bank account, a lot of things in your life just wouldn't exist. Like you wouldn't be able to save money for the future, you wouldn't be able to invest, you wouldn't be able to have a business. And solving this problem is probably one of the biggest problems to me in the financial service industry. We have here, and let's talk with Rafael about this. Your business actually answers an issue that I think is not created, but certainly amplified by traditional banks. Can you explain a little bit, your business, and how does it help people ultimately?
Yes. So we contribute to financial inclusion by expanding the access to credit. So for many reasons, people are wrongfully rejected from the financial system, from the credit system, and it's our mission to solve that. So how do we do that? We look at people in a very different way than the traditional lenders, i.e. banks, do that. So traditional banks, let me start by explaining that, have a very ancient way of looking. They take data from a credit bureau. So they look at data, for example, has somebody repaid a loan 2-3 years ago? Do they have a credit card? What kind of credit card? And this information can be useful. And it is useful, particularly for the very, very best demographics, for the most solvent borrowers. And what we do is that we look at all sorts of data that we can access and that the borrower provides as part of the application process. And one important data point is bank account data. So we use open banking to access bank account data. And it turned out over the years that we've doing this, that this is so much more predictable than anything else that you can look at. So we look at very recent data. Bank account data is very recent. And particularly in times like this, when things are changing so quickly, when inflation plays an important role, the costs are going through the roof, you need real-time data. And people it's very convenient. You just contribute your credentials, and then the algorithm does the same. And so we don't have to take a yes-no view, even if in the bank account statement there are individual factors that might look negative. There are others that can solve that. And with that, we can significantly enlarge the scope of borrowers that with traditional banks are wrongfully rejected. And this can include people as students, employees that have a short employment history or are still in probation period, and a big part of the Aux Money borrower base is also self-employed people that have a very, very hard time to get a loan from the bank, and as we know now, it's totally for the wrong reason. So we serve these customers very well.
Yeah, okay. John, you're back?
I'm back.
Hopefully. Oh, great. So I would ask you to introduce yourself and also talk about your business. I mean, your business solves problems for a specific group of people, right? The people who don't have income, like steady income, they don't have a paycheck every month that is exactly the same. And you found an answer for these people to deal with their expenditures, daily life challenges, etc. So if you can talk a little bit about that.
Thank you. So John Downey, co-founder of SteadyPay. SteadyPay, what we originally sought out to solve was income volatility for gig workers, freelancers, everybody that's working in that unstable economy, which we're seeing more and more people move into today. For those people, what we've created is an income smoothing solution that ensures that they get parity with the salaried workforce. So wouldn't it be great, instead of worrying about your next paycheck and what I'm going to get paid, to actually always get paid the same amount?
Great. And Sanja, you come in with the crypto angle. Like, tell us a bit of your company, but also how do you envision crypto being a tool for, financial inclusion?
Sure. So as a financial payment platform, we sit in the middle of a two-sided market. So basically, we serve merchants on one side and buyers on the other side. And there are multiple advantages of using crypto on both sides. So starting from merchants, because that's my background. So today, if you're selling online or offline, but especially like if you're selling internationally, you can end up paying between 3 and 11% just in payment processing fees. And that's not to count like chargebacks that you have on top of that, like credit card fraud that is causing like a 40 billion loss annually in the industry. And therefore, using crypto and accepting crypto as a payment method allows you to wipe out all the traditional players like banks and credit cards. And you can reduce your payment processing costs up to 95% or more. So that's on the merchant side. And I think on the buyer side, everyone thinks that it started in emerging markets, but actually now it's true for our more developed countries as well. But people all around the world are hedging their wealth in crypto, especially starting in countries like Turkey, like Argentina, with a very high inflation. But that's catching up with us as well. And crypto is the only form of money that you really own. So you do not depend on a government or a bank to either maintain its value, or it cannot get confiscated. So that's the main advantage. Mm-hmm.
You'd have to assume, though, that crypto is going to become, I don't know, this idea that crypto will become a widespread currency where people can just do their daily things with using it. I mean, are we going to get there? Like, maybe the other panelists can talk about this, what their thinking and the feeling is about.
Sure, I can start if you, yeah.
Yeah.
So most of our payments today are processed in stable coins. And stable coin, for whoever doesn't know it, it's pegged to like a stable value, like a USD dollar. And that really shows that people are already using crypto for everyday use cases. And we have, for example, B2B companies paying their suppliers in crypto. We have companies paying their employees in crypto. So it's already widespread. But I do agree with you that there are currencies like Bitcoin, for example, that are more used as a store of value in some countries. But again, like at the same time, in countries like Turkey, where lira devalued like 80%, it's better to have Bitcoin and like use it to pay for goods and services. So I think, it really depends, but we are already in a phase where crypto is used for purchase of everyday goods and services in some countries, and in others, it's growing.
You guys have, Rafael, John, any thoughts on this?
Maybe I take the topic of cryptocurrency to talk about financial inclusion. I think one of the use cases that we're going to see and where crypto can play an important part for financial inclusion is digital assets, the tokenization of assets. And if you think about, for example, private equity investments or even real estate investment, I'm pretty sure that at some point this asset class will be accessible way more easy than it is today. So today, if you want to buy a stake in a private equity fund or become an LP, usually you have to come up with $500,000 or even significantly higher than that to participate. But I think crypto and the tokenization or the digital asset will allow that asset class and others to be available to be bought at lower amounts. And I think that is something that we will not only see in the next 20 years, but hopefully in the next 3 to 5 years.
And I'd say for our customers, what we're seeing is a lot more of them. Still gone?
Can you hear him? Can you guys hear him?
Can anyone hear me?
No.
What about now? Oh, there we go. I have to look funny. So for our customers who fundamentally, both individuals and businesses who are struggling paycheck to paycheck or paying their staff, to be honest, they couldn't they couldn't care if it was crypto or fiat. What they're looking to do is to solve their real-time problems. So as we move from a crypto to a fiat world where we're still talking about 1% versus the 99% of sort of fiat payments, we'll see more and more use cases where crypto makes sense, especially for countries where their currencies have a lot more problems. We're also starting to see more demand from our customers who are sending money overseas to want to be able to send money in any currency, and it's not usually into the local currency. So if they're in Nigeria, I don't want to send it in the local currency, I want to send it to something else. We're also seeing for our customers, as I say, that they're fundamentally looking for the businesses that they trust to solve the problem for them in the best way. So it's interesting that a lot of people are actually looking for that trust factor.
Yeah, and just to add, because I think is important, so today more than 2 billion people in the world are unbanked or underbanked. And that's because we design traditional banking and traditional payment solutions in a way that many people cannot have access to it, either because they don't have the means or they don't have ID, etc. And finally, I think with crypto, we have the technological means for anyone with internet connection and a device, which is 80% of the unbanked, to participate in global trade, and finally have a means to own money.
Now, if you think about the current environment, it's pretty challenging, right? So you have high interest rates, you have inflation, you have recession, people starting to face difficulties making payments on their loans, and you guys are, in fact, working exactly in that place, and even you with crypto during crypto winter. How pessimistic are you to where we are going? You can hear me? You can hear me or you can talk?
Hardly. I couldn't get the question. Did you get the question? Yeah? Okay.
How pessimistic are you to...
On the macro environment?
On the macro environment, exactly. I mean, you lend money to people, and supposedly these people are going to probably start struggling paying it back.
I think in general, the macro environment for fintechs in general is quite interesting and comes with some challenges. You mentioned inflation, and in the credit space, that means that we have to take our responsibility even more serious and make sure that we only make available liquidity to people that have a chance to repay, but not only looking at data which is available now, but also make a prediction what will happen in 6 to 9 months' time, when rising energy costs, etc., will actually hit the account and it will be ruined. Right now, the energy crisis, cost of energy crisis, at least in Germany, to a very large extent only happened in the newspaper, but it's not yet real. But that is changing. That is changing quickly, and we can see that every day in the data. That's with regard to inflation, and interest rates are rising across the board. That means people, I mean, you can see mortgage rates have already increased significantly. So that makes it challenging for consumers, particularly if they have to refinance a previous loan on the mortgage side, which is now becoming due and needs to be refinanced because it can't be repaid, will come at significantly higher monthly installment. And that's certainly a challenge for many people. But that's, I think, where we as a fintech industry can make a big contribution. Because with our, let's say, superior data analytics capabilities and understanding of people's cost structure, income structure, we'll be able, as I mentioned at the beginning, not to be too tight and actually support people
Provide
through these
lending.
difficult times. And I think fintech times, lending companies can or will play a very important role in the months to come.
John, you have...
Yes, I'd say people need more support now more than ever. We're probably heading into a 4+ year recession. The cost of living, coupled with inflation, is a double down for problems for a lot of people. It's going to take a combination of governments, local regulators, fintechs, and venture capital to be able to solve that problem. And it's going to be a multi-year solution and an ecosystem of fintech players. As far as we're concerned, and what we're seeing for actually being able to create a real difference for people. Because it's one thing to be able to say, cool, let's move some money, or cool, let's create some stability. But actually, how do we fundamentally improve the quality of people's lives when actually there's a massive headwind against them? So I think there's a lot of ways in which both we as fintech startups, backed by a lot of venture-backed, as well as regulators being more progressive and working faster, can actually help us.
So we should expect you guys to be expanding your client base during crisis instead of retrieving as traditional banks.
Correct.
Okay. So anyone who needs a loan,
good for us.
Talk to these guys. They are ready for you. I think our time's almost up. Sanja, do you want to say something about the...
No, I think just to comment on the crypto winter that you mentioned. Actually, I think, what is the long-term vision that you have? Because if you have a positive outlook on the long term, actually what is happening is good for the industry, because it's going to wipe out all of the actors and companies that did not have solid fundamentals. So it really is like the internet bubble like many years ago. And actually is going to leave space for companies with a real business, companies that can be profitable to offer good businesses to customers. So I think, long term is a very positive outlook on our industry.